Hi, this is Dave Gardner with Keller Williams Realty, and I'm here today with David Williams, a Trusted American Mortgage. How you doing, Dave?
Thanks, Dave. Glad to be here.
Good, good. Well, we've been working together as a real estate broker and a lender for over 33 years now, since...
you have to really say that out loud, Dave?
Since 1987, you bet. So, geez, it's hard to believe we've been in the business that long.
We started when we were 12, right?
That's right, that's right. So, but I remember you were the first lender I was working with, and here we are today. We're still working together, and now you're with Trusted American Mortgage.
Right.
So tell me a little bit about Trusted American.
So I've always worked with big mortgage bankers. That's been most of my career, and what I found coming back in as a loan officer was that I could be more competitive with a smaller broker environment where I had more access to more investors and better pricing and lower cost. So the experience for the customer is better.
Right. Yeah. A lower cost is always attractive to buying public. Absolutely. Yeah. Absolutely. So, does Trusted American Mortgage have any kind of special products or anything that they like to work with or specialize in?
Yeah. So we have all the generic programs that most lenders have. I think our specialty, or mine anyway, is just trying to structure a transaction that works best for the borrower. And it may be me doing the loan, or it may be somebody else doing the loan. Just whatever works out best for the buyer.
Excellent, excellent. So you do all the FHA loans, the VA loans, the conventionals, and all the different varieties.
Yeah, and there's a lot of creative stuff that's out there for the individual niche product stuff that's available too. So just a wide range, full service.
Okay, for people that own their own businesses, self-employed, that type of thing, you need those more often.
Yes, correct. And they're not as a little bit more restrictive in terms of what the programs are when you come in those products. The credit's important, their investment cash down payment's important, but yeah, a lot of different programs.
Right. What is considered a good credit score these days, and what do the scores range between?
So I would say a good credit score, especially on conventional loans, is a 720 to a 740 is really good. I mean, if you're in the 780 to 800s, that's awesome. FHA is in the 620 to 640 range, is kind of good on those products. You can do loans lower than that, but it gets very pricey.
Okay, so does the interest rate vary depending on your credit score?
It does, yes. So the investor looks at higher credit scores as a better investment risk for them, and so they're willing to pay better interest rate for that.
Excellent, excellent. Well, tell me about how does an underwriter fit into the picture of getting a loan approved?
So the underwriter is really the fact checker in the transaction, and so what they do is they review all the information that the loan officer and the processor put together, and they confirm that the income that we came up with is right. They'll look at the assets, make sure that there aren't any large deposits that aren't documented. Review credit, because it's important that the borrower is going to be able to repay the loan. And then they review the asset, which is the property itself, to make sure that the collateral that's done on the loan is going to be a sound investment for the investor, so that if something does happen to the borrower and they're not able to pay, they're going to be able to get their money back out.
Okay, okay. No, it seems to me that most loans are sold on the secondary market after they're first approved. Tell me a little bit about that.
Okay, that's pretty normal because most mortgage companies don't have enough capital to keep the loans on their credit lines themselves and have a servicing portfolio. A lot of the larger companies do, but that's pretty typical. Even with the big banks, they will sell the loan a lot. Depending, a lot of times it's on the investment quality of the particular loan, depending on how much money people put down. If there's more risk in the loan because of lower down payments, then they're the ones that usually are getting sold.
Right, right. Now, interest rates are still pretty low today.
Correct.
Have you noticed that there's more people buying homes and getting loans these days, or has it just stayed pretty steady?
I think it's been pretty steady. I mean, obviously it's a great environment for borrowers to buy right now. I think there's been a lack of education, so a lot of buyers think that you have to have 20% down, which isn't true, and so that limits them going into the marketplace. But with the rents that we are, especially in the Denver market, I think it's very advantageous for them to buy right now.
Right, right. So on the conventional loan side, you can have down as little as 5%?
You can actually, there's programs down now, 3% down on the conventional
3%
side.
down?
Yeah,
Wow.
depending on, there's income requirements on that, and there's even a 1% down program that's out there. A little bit more expensive on the interest rate, but a lot of programs that are available.
Right. Now, do you help people with refinances as well?
I do. We do them all. Really look at the individual situation with each borrower to decide, sometimes it's just interest rate and lower payments. Sometimes they maybe want to go from a 30-year to a 15-year. Maybe they got enough equity in the property they can get rid of private mortgage insurance. So we really look at the whole situation and try to figure out, we'd be able to help them the best way we can.
Is it possible for them to refinance and take cash out and use that cash for something else?
Absolutely, yeah. If they have enough equity in the property, it gives them an opportunity to do that. They can use it to pay off debt, buy an investment property, a lot of different things.
You bet. So when does it make sense to refinance based on how much lower you can go on the interest rate?
Yeah, so there's a lot of different schools of thought on that. I think it just individually depends on each borrower's situation, what they're looking at. Typically, you're thinking a half to a point down is what you're trying to do. But that could vary, again, depending if they want to get out of that 30-year loan into a 15-year because they want to build up more equity. So really it takes a conversation with the borrower to decide what to do.
You bet. Now, you've been in management in the lending industry, as well as wearing a couple other hats,
Sure.
other than just being a mortgage banker or a mortgage broker. Tell us just a little bit about that, all the different things that you've done in the mortgage industry.
So I've always been a top producing loan officer at every company that I worked at, and I kind of got into management, to be honest, selfishly, to get my loans done faster, just to be completely honest. But what I found was I have a strong analytical ability about putting transactions together, taking all the different parts, and so what I was doing was helping loan officers with loans that they couldn't get approved, restructuring the deals for them and putting them together in a new way to get the loan approved for the borrower. And so that really put me in the forefront on the management side. And from there, I was very good at it. I became the corporate sales manager, which led to a regional role for a company, and then eventually running national production for a major mortgage company out of Texas. And did that for 10 years, and then was traveling every week, so it just got to be a lot. And so I had two options. I could continue that, or I could come back to my first love, which is helping people get into homes and building relationships with people like yourself. And so that's what I've done.
So yeah, oh great. So you're basically working with the homeowner today, get loans and refinance loans, as well as all the more real estate brokers out there.
Correct. Yeah, that's really my first love. There's just a joy in helping people realize, with first-time home buyers, their dream home that they thought they never can get into, or watching people buy their forever home, and you build relationships. They become my friends, just like my real estate agents who we've known for a long time. You just develop relationships, and it's very rewarding to be part of people's lives and be at the closing table and watch the joy that they have there.
Absolutely. Well, I really appreciate your help, and especially the times when you get loans done that other loan officers have not been able to get done.
Right.
So that's really great. It makes dreams come true. So I really appreciate that, Dave.
Thanks, Dave. Appreciate the opportunity and our relationship.
Absolutely. So this is Dave Williams with Trusted American Mortgage. And Dave, what is your phone number if somebody would like to reach you?
So the best way is to use my cell phone, which is 303-947-1960. And I'm available all the time, so call.
Thank you. Have a good one, Dave.
Thanks, Dave.